Hi friends, in today's video we'll discuss what is money market funds, what are the top money market funds in the UK, what are its advantages and disadvantages, and most importantly how you can invest into money market funds directly from UK. In simple terms, money market funds are pretty similar to mutual funds where there is a fund manager who usually decides where is going to park our hard-earned money, and he makes sure that he'll invest in a cash-like instruments such as corporate bonds or government bonds, in the UK also known as gilts, commercial papers, treasury bills, certificate of deposits also known as fixed deposits, and usually aims to track a particular benchmark called SONIA. SONIA stands for Sterling Overnight Index Average, and this is published by Bank of England usually on a daily basis. Here is the list of top money market funds here in the UK, and interestingly they all are offering similar returns, so we don't need to do any comparison here except its AUM and total expense ratio. However, it is not a financial advice and money market funds are not protected by FSCS, and it's best to read its key information document KIID or offer document before investing in any money market funds. So my top pick for money market funds are, so this is just my top pick for money market fund in the UK. So number one is Royal London Short-Term Money Market Fund. Second one is Legal General Cash Trust. The third one which I chose is Fidelity Cash Fund, and the fourth one is Vanguard Sterling Short-Term Money Market Fund. Let me tell you that these are not in any order. You could choose any of these and none of them are my favorites. So please do your own research before investing into these money market. Importantly, if I had to choose, then I would go with the GPP version of money market fund. Obviously because it gives me a better return compared to USA version, and there is no currency conversion needed. There are ETF versions of UK money market funds are also available, but I have deliberately did not choose them because I didn't want it to make this video too long. So now we'll discuss its advantages and disadvantages. The main key advantage is its liquidity. Yes, it's like a cash-like instrument. So you can withdraw money just like as you withdraw money from any bank. So in my opinion, that is the number one reason that why sometimes people do park their money in there. Also, sometimes if there is any market fluctuations, then also people do park certain portion in there. People would like to choose for safer option, and this is one of the safest option where they can just park for some time and then they can withdraw anytime they would want. The second key advantage is its low risk. Generally speaking, money market funds are cash-like instrument, just like as I mentioned, and the risk is very less. Very few times it happens that you might get less money than invested. Again, this is not a financial advice. Yes, compared to stock market or any type of ETFs, money market funds usually they don't have any higher volatility. So for example, if you invest £5,000 on 1st of May, then end of May, you might get similar return and you won't see any major fluctuations. The third key benefit is it's ideal for short-term investing and not for long-term. Because money market fund gives very less return, it is not that attractive option to invest and park it for long-term. Obviously, someone would go with either ETF or stock market option or mutual fund options or any other options compared to money market fund, because the return is very less, and in certain occasions it doesn't beat inflation. For short-term investors such as those who think that market is going to crash very soon and they would want to park for some time, at least 3 months or 4 months, then they could choose this option and for them it works very well. But if someone would want to invest for at least more than 3 years or 5 years, even more than 1 year, then this, ideally speaking, is not a good option. Another key benefit is it can be held in ISA or SIP, individual savings account here in the UK, and SIP, self-invested personal pension, and both of these options can be selected. This could be a very good option for those who wants to save some money on taxes, and these two accounts are tax-free accounts in the UK. So these could be a very good advantage for money market fund investors. Now let's discuss its disadvantages. Money market funds are not suitable for long-term investing. It is definitely not like a mutual fund, although it can be classed as a mutual fund, as we have seen, but it is a not good option. Even in certain cases, it doesn't beat the inflation. So this is basically a key tool for parking some money for short term, just to avoid any market volatility or any type of corrections. It is not designed for future wealth or generation, but it could be an option for those HNIs, high net individuals, those who wants to park their money because they've got plenty of money, and those who want to park their money in safer way. So this could be one of the options. Another disadvantage for this money market fund is base rate dependent. It could be one of the reasons because SONIA, Sterling Overnight Index Average, usually performs on the basis of bank rate or Bank of England's base rate. If Bank of England decides to decrease base rate or bank rate, then the situation would be very worse. So because it is bank rate dependent, you are going to get very less return, because obviously it is dependent on SONIA, and SONIA basically is dependent on bank rate, which is Bank of England's base rate. So it is the biggest disadvantage. So here we could see that between 2009 and 2022, the return for money market fund was less than 2%, because this is the actual SONIA rate which I'm looking at. It only came up to 4.45 in 25th of April, the time of recording this video. So as you could see that it gives a very less return during tough times. If the bank rate decides to lower its base rate, then this might be affected, as it is not protected by FSCS. So it's not like bank where if you invest up to £85,000, then your cash is protected. It's not like that. So please do read offer documents carefully before investing. It's like investing into a mutual fund. So in the last point which we're going to discuss is how you can invest into money market funds. The easiest method for investing into money market fund is through investment platforms. Currently, I'm not partnering with any of such money market fund platforms or investment platforms, but a simple Google could help you do your own research. Please do your own research before investing, because your money is at risk. So here is an example of Royal London short-term money market fund, and as you could see, their risk and reward profile, it is a very lower risk. So it is just 1. When you compare it with any other ETFs, then it should be between 5 to 7, but the risk over here is very less. So when we read the policy, the fund is actively managed, meaning that a manager will use their expertise to select investment to meet their objectives. And where is going to invest our money, everything is clearly mentioned here, and everything is transparent. I would request you guys to please read such offer documents. So how you can do that? So you can go to their official website and download their latest version. That's all from my end, guys. So if you have ever invested in any type of money market funds here in the UK or anywhere in the world, then please do comment below the name of the money market fund, its total return, its benchmark, as well as its expense ratio. Then I would respond to that comment. Thank you for listening and happy investing.